Okay, we're live. It is what is it? It's February 16th, 2024. Welcome to the weekly roundup, Hart Investment Group. I'm Scott. That's Ben Hart.
Hello, everybody.
Just jump right into it. It's a long weekend. We want to get it going here the right way. So let's give everybody their news and get on with our weekend.
We will, but we just, I think we want to remind everybody at the outset that anything we discuss today is for information purposes. And any questions, anything we talk about, you should contact your advisor, us, or your own advisor, and happy to discuss them more. But information purposes today. Let's go.
Super good point. Super good point. Okay, so yeah, what happened this past week? What was on your radar?
So there continues to be ebbs and flows around inflation, and as we listen to a lot of the economists of the world, we talk about inflation on or off, or is it happening? Is it not happening? And we had the CPI number come in a little bit hotter than expected in the U.S. And then the counterpoint, which I think I referenced a few times this week on the daily, was the PC deflator. And all that means in normal language is that people are spending less money. And we saw retail sales yesterday. People are spending less money. Retail sales missed. So the economy, both in Canada and the US and Europe and China, are slowing. A few countries around the world where you're still seeing some expansion, but you're seeing slowing growth in all of those areas. But particularly, most of the news and attention goes towards the U.S. markets, and that's what we saw this week was people are spending less money. That's because there's not as much liquidity in the system because interest rates are high.
Why we're the experts right there.
Yeah, exactly.
People spending less money because they don't have it.
That's summarizing the lingo that pops up in the news into simple language.
Yeah, exactly.
Yep.
Okay. What anything else, or you want to jump right into the slides?
Yeah, we can jump into the slides, and if there's anything that comes out of that, we can elaborate on those. But let's get that teed up here.
Tee it up.
Tee it up. Tee it up.
As you're doing that, we should mention, as we have been, that our RSP season is upon us. Tax season as well. So if you have any contributions to make, let us know. TFSAs as well, RESPs, any kind of contributions. Good time of year to do them.
Yep. Definitely.
When's the RSP date? Is it February? It's leap year, right?
It's a leap year.
29th? Yeah.
That's it. Yeah. 2 Thursdays from now.
Oh, wow.
Yeah.
Okay. Good to know.
Yep. Coming down to the end.
All right. Well, what do you got on the screen here for us? World Economic Outlook.
Just before we jump off to that, but the RSP, yes, contributions. Continue to get lots of questions about this, whether you should contribute or not. Always, you shouldn't contribute more than you paid in tax for the year. So if you had a big year where you paid a lot of tax and have lots of contribution room, then you should take advantage of it. But it's okay to accumulate until you have a big tax year. So if you have a big tax year, then do a big contribution. Any questions, certainly reach out to Scott or I, and we can talk through the specifics for you. But still get lots of questions about RSPs.
Another great point. You got all the good points today.
Yep.
Like it. Yeah.
Presentation, yes. So economic data, just a couple of simple things. As I mentioned, some of the things we saw this week and really wanted to put out big picture. National Bank, this is their forecast for economic activity for the next couple of years. Always good to see projections, what they think about it. And so, these are relevant from a perspective as you see the direction based on current setup, what's likely to occur, assuming nothing changes, which is not going to be the case. But I think that 2024 is probably most relevant to pay attention to. Eurozone, which going from 0.5 to minus 0.4 is a pretty material change. And as I've said, the ECB has already signaled that they're going to cut rates. And so it's just a matter of when they do that. When they do that, actually, I think we'll see a material change there. In Canada, you see the forecast is stuck at a 0. Nobody wants to say it's a recession, so 0. And we saw the Bank of Canada signal this week that they're going to stop quantitative tightening. Quantitative tightening is just really they're not buying government bonds or mortgage-backed securities. It's really the kind of the intervention where they're trying to take liquidity out of the system. They're going to stop doing that. And as a result of them stopping doing that, that's actually going to help be a positive. So they signal that this week. And so it's good to look at and see what the expectation is. And from an investing perspective, it gives you a view of what's coming ahead. So obviously you look at China, India, two countries that are going quite quickly. Markets are at quite different places because India's had a pretty good run and Chinese markets had a bad go. So I think there's opportunity there. If you own India on the long side, you may want to take some profits. And if you don't own China, you may want to consider looking at it as well. To the point about what I said at the outset, revolving credit, this is US. And so if you look at that revolving credit number, that's $1.3 trillion, plenty ahead of the pre-pandemic trends. And that goes to the point, people aren't spending money. And then in addition to that, you look at the other is ratio of outstanding credit card loans into serious delinquency. So that's 90 plus days. We're seeing that continue to spike. So where you get this kind of contradictory inflationary numbers, which you'd see this week, you get this counterpoint, which I think is bigger and more material, which is the U.S. Federal Reserve is going to cut rates this year for sure. It's just a matter of at what point and the severity of it. My view is probably it will likely be more than is presently priced in because of these points, and certainly something we continue to pay attention to. Just thought it would take a practical point that sometimes I get asked about is, we talk a lot often about the economy and maybe more short-term tactical things, and we'll talk about ESG and which responsible investing and so on and so forth. Lots of attention goes towards that. But this, I think, is a more practical, longer term type. I often get this question: if I were to buy something that I'm not going to look at or do anything with for 5 years, what should I look at doing, and how would I think about that? And so when I think about the electrification of everything, the one place that has always stood out for me is what's going to happen with copper, because we haven't had a copper find in decades. So you look at what's the likely path forward from here. And in this case, this is a report from Goldman Sachs. And if you look at the kind of the heavy blue line, which is global copper production versus the global copper consumption expectation based on what's happening, electrification, we got a massive gap here. And so if you agree with this view, which I think most probably do, you'd look at it and you'd say, okay, so where are the potential opportunities? When should I look at these businesses? How should I be thinking about it? And you can look simply either at the big caps, like I've selected here, or the big cap market copper mines in the world. And then you go down and you can look at, for example, like a Vale, big copper producer, something around an 8 or 9% dividend at these levels. Stock's down about 15% this year. You might say this is a reasonable time with my view that I think that copper is going to do quite well for a longer period of time. Or if you want to look like more of a pure play, like a Freeport-McMoRan, which is a pure play copper, similar, you can look at it and say, how does this fit? And is this company that I'd want to own for multi-years? And then you buy an initial piece and then you can add into it. So if that's the theme you like, that's kind of how we would think about it. And then we would follow along as companies get added to our investing universe. This is an example of a company that came in this week in the last month. Something that National Bank covers it's called Metals Acquisition Limited. And so you look at this company, you look at what they currently think it's trading at, and you look at the upside return, and you say, is this something that I'd want to consider within the portfolio? And so I thought it'd be worthwhile just having a kind of a practical view of, stripping things back, looking where potential opportunities are, short term, long term. In this case, I think this is a long term trend that electrification is happening, and how can you position yourself to do well through that period. So thought I'd break it down from how you think of an investment and theme type of process. Ooh, makes sense?
Yeah, great. That's nice ones there. There we go. Back on it.
Back in
Okay,
the
great.
mix.
Back
Yeah.
in the mix. All right. So looking ahead, what do we see for next week? Short
I
week?
think, yeah, right. So I think just before we jump off to that, there are some good earnings this week as well. One thing I didn't comment on just was on that. We had Coinbase, which has had a nice run here. It was up 10% for the day. It was up about 15% at one point. They had good earnings, first profit in 3 years. Companies growing quite quickly. Obviously, they are the custodian for most of these major ETFs that have launched. So, since they're the custodian, they benefit as these ETFs are growing, and they're growing quite quickly. So that was a real positive in portfolios this week. And then just I think from a structure, as earnings came out, we saw Nike and Cisco and some of the other big companies do layoffs. So Cisco was something around 4,000 people laid off this week. So, this is part of what happens as the economy tightens up, is people lose their jobs, wage inflation slows. Like, this is part of the cycle, and tends to also present opportunities when these companies start to bottom. So, if you look at maybe a Cisco or an Intel or some of these companies that have done massive layoffs, their stock's taking a bit of a hit here. Puts their companies in much better shape though, as we come out the other side. So present some opportunities.
Right.
Yeah. Next
Awesome.
week.
Next
Next
week.
week. As you said, Monday is a holiday in Canada because it's Family Day.
Family Day.
Family Day.
Big day. I guess the US market open, or do they have another holiday?
Yeah, the U.S. market's open on Monday.
Okay. Better have you keep your phone on, Ben.
Yeah. We'll pay attention. We'll pay attention. But
Always
because the
do.
TSX is in Ontario, that's why the equity markets are closed, and bond markets are never open around holidays. So the bond markets have been closed already for 6 hours today, and they'll be closed on Monday.
Hilarious.
Yeah.
Okay. Was that it? You got anything else before we go?
No, like that's it. Yeah, shortened week in Canada, but yeah, not too much coming out next week from a data perspective. So we'll just see and continue to track what's going on.
Awesome. Awesome job. And we will see everybody next week. Have a great weekend.
Yeah. Take care.